Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets Wall Street doesn't want you to know. And today we're diving into Associated Capital Group's decision to leave the big leagues of the New York Stock Exchange. Talk about a major change of scenery. So what's the big news? Associated Capital Group Inc. is telling the New York Stock Exchange, or NYSE, see you later. They're packing up their bags and voluntarily delisting their Class A common stock from the NYSE. But don't worry too much, they've got a plan to keep things trading. The company, often just called AC, is also planning to stop being a registered company with the Securities and Exchange Commission, or SEC. This means they'll stop having to file those super detailed reports like the 8K, 10Q, and 10K, which are the usual heartbeat of publicly traded companies. Think of it like this AC is choosing to step off the main highway and onto a smaller, perhaps quieter road. They officially announced this on August 15th, 2025 and aim to have their last day of trading on the NYSE around September 4th, 2025. After they're officially off the NYSE, AC plans to have their Class A stock traded on something called the OTCQX platform. Now, OTCQX is like a different kind of marketplace for stocks, often for companies that are a bit smaller or perhaps want to reduce their regulatory burdens. It's not quite the same as being on the NYSE, and there's no guarantee that brokers will continue to make it easy for people to buy and sell the stock there. Why would a company do this? The president and board of directors believe it's what's best for the company and its shareholders right now. They feel the costs and the headaches of being a registered public company, all those reports, legal fees, audit costs, and the demands from rules like the Sarbanes-Oxley Act are just too much. They want to save that money and management's time and put it back into finding new business opportunities. Essentially, they're saying that the benefits of being on the big NC and having all those reporting requirements are outweighed by the costs and the effort involved at this particular stage of their business. It's a move to streamline operations and cut down on expenses. This filing also includes a press release from Associated Capital Group dated August 15, 2025, which likely elaborates on this decision. Since this is an 8K, which is a report for current events, the main point here is this delisting announcement. There aren't big financial tables directly in this document itself, but the reason for the filing is substantial. This exhibit number 99.1 is the actual press release that announces this move. It gives us the official word from the company about why they are making this significant shift. So let's break down what this really means for the company and for shareholders. First, the cost savings aspect is huge. Being a publicly traded company on a major exchange like the NYSE comes with significant compliance costs. These include fees for listing, legal counsel for SEC filings, accounting and auditing services, and even the internal resources needed to manage all of it. By delisting and deregistering, AC expects to cut these costs considerably. From a business strategy perspective, this move suggests that AC may feel that maintaining a public listing on the NYSE is no longer the most effective way to serve its business goals. Perhaps they are looking for more flexibility, or maybe they see opportunities that are better pursued away from the intense scrutiny and reporting demands of a major exchange. It could also mean a shift in their growth strategy, where they want to redirect resources that were previously spent on compliance towards operations or new ventures. For shareholders, this is a mixed bag. On one hand, if the company can indeed save money and reinvest it effectively, that could eventually lead to better financial performance down the line. On the other hand, trading on the OTCQX platform is generally less liquid than trading on the NYSE. This means it might be harder for shareholders to buy or sell their shares quickly and at a desired price. Also, the reduced reporting might make it harder for investors to track the company's performance and financial health closely. It's a trade-off between potential cost efficiencies for the company and potentially reduced transparency and liquidity for investors free of platform. Is generally less liquid than trading on the NYSE. This means it might be harder for shareholders to buy or sell their shares quickly and at a desired price. Also, the reduced reporting might make it harder for investors to track the company's performance and financial health closely. It's a trade-off between potential cost efficiencies for the company and potentially reduced transparency and liquidity for investors. The company's intention to provide liquidity on the OTCQX platform is a crucial point. They are acknowledging the need for shareholders to be able to trade their stock, but as we mentioned, this platform operates differently. We'll have to watch and see how that plays out. Overall, Associated Capital Group's decision to delist from the NYSE and deregister with the SEC is a significant strategic move. It signals a desire to reduce costs, gain operational flexibility, and perhaps focus resources on new growth avenues. For shareholders, it means a shift to a less regulated and potentially less liquid market, which comes with its own set of risks and opportunities. The success of this strategy will depend on AC's ability to effectively manage its operations and provide value to shareholders in this new environment. Now, looking at this filing more broadly, we see Associated Capital Group taking a rather drastic step to reevaluate its public company status. This isn't an uncommon move for companies when they feel the burdens outweigh the benefits. It often suggests a company is looking to simplify its operations, reduce costs, and perhaps focus on longer-term strategies without the immediate pressures of public market reporting. The key here will be how well they can execute their plan to provide alternative liquidity on the OTCQX and whether the expected cost savings translate into genuine improvements in their business operations and profitability. The lack of detailed financial tables in this specific 8K means we can't do a deep dive into their numbers here, but the implication of this filing is that they are fundamentally changing how they operate as an entity paris and whether the expected cost savings translate into genuine improvements in their business operations and profitability. The lack of detailed financial tables in this specific 8K means we can't do a deep dive into their numbers here. Alright, that's our breakdown of Associated Capital Group's decision to leave the NYSE. What's your take on this move to the OTCQX platform and what it means for the company's future? Drop your investment thoughts and predictions in the comments below. If this straight up analysis was helpful, make sure to smash that like button, it really helps us out, and subscribe for more corporate deep dives directly from the filings. Also, don't forget to join our Discord community, linked in the description, to keep the conversation going. Thanks for watching, and we'll see you in the next one.